Earlier this month, Honeywell, long one of our favorite industrials on Mad Money, held an analyst meeting where they updated guidance. I told a picture that was widely interpreted, frankly, as grim, including by me. And I've been a long-term supporter of the company. Stock fell promptly $10, though it has regained some of that ground in the past 2 days. I've wondered ever since whether the world's economies perhaps have slowed to the point that even Honeywell can't deliver solid performance, especially in aerospace. But after the bell tonight, Honeywell filed a document that presents a longer-term view of the company, and it does seem to clarify a lot of what's concerned me about the previous presentation. That's why I'm grateful to have Dave Cote, the chairman and CEO of Honeywell, to get the full story on what's happening. Dave, welcome back to Mad Money. Good to see you.
Jimmy, always nice to see you.
All right, Dave, you know, we're neighbors. We've known each other a long time, but I listened to the first presentation, and I said, holy cow, maybe this is why they felt they had to buy United Technologies. Maybe this is, you know, and then after the bell, I saw a presentation that instead of sending the stock down $10, might have actually had the stock go higher. So what happened here?
What happened in the third quarter?
What happened between one presentation, which was very short-term oriented, frankly, and this second deck that has come out after the bell that, to me, offers a view of 2017 that is incredibly strong and reminds me that you reiterated guidance. You didn't cut guidance.
That's the point we kept trying to make.
Right.
And it seemed to get lost in the third quarter because, if you recall, that presentation started out as, hey, we're going to splitting ACS. We want to be able to explain the reorg. We want everybody's numbers to be right when we
then it's the controls division.
Yeah, and we wanted to say, okay, here's an update on everything because we also spun a business, we sold a business, we did a bunch of restructuring. So we had a lot of moving parts. Said, let's clarify all this so that earnings day, it's not going to be a problem. Okay. And Mike, I have to say, I was astounded by the reaction. And if you recall, we actually had in there, hey, 2017, this is what it looks like.
Yeah, but Dave, candidly, I got to tell you, you did talk right up front about weakness in aerospace, and a lot of people really associate Honeywell with aerospace.
Yeah.
But there were other things in the deck tonight which made me feel that we're actually at an inflection point in oil and gas. You were negative on oil and gas, and that the issue of aerospace is not nearly as dire as what people have made it out to be.
That's true on aerospace.
Okay.
It's one of those things that we have to deal with because the bizjet market is declining, but commercial is still doing fine. DNS, defense and space will do fine. I did say, though, that oil and gas was going to bottom this year. I've said that several times, and we were more definitive saying it's bottomed in the third quarter.
Right. Well, more definitive. I mean,
actually, I take it back. We also talked about fourth quarter, how UOP in particular was going to be coming back.
Okay.
But it just seemed like, and we tried to say, as you know, on the guidance for the year, is we started off at 6 to 10% EPS. We took it to 8 to 10% in July, and now we made it 8 to 9%. Which is hardly dire again.
No, but again, I want to go back over this because you talked even at the beginning of our interview that you reshuffled the portfolio. But what was lacking when I listened, was that you were improving the growth profile through portfolio management, which is something that you really made clear tonight.
Yes.
Why did you feel like you needed to clarify that?
Because the long-term message seemed to have gotten lost.
No. Totally got lost.
Well, it was one of those where I think I give credit sometimes for we've said some of the stuff enough that everybody gets it.
Right.
But we didn't really put it together in an overall package. So shame on me for not communicating that more. But I didn't think anybody would really be interested in that at the moment. They'd want to understand exactly what the moving parts were.
True, but it's only in this deck that I really felt that, to use your term, that there is a favorable setup for 2017.
Oh, yeah, and we've been investing heavily because that's one of the other things that we end up hearing is, gee, with the transition, Dave's been squeezing the business in order to generate margins.
Yes, that was another thing that the analyst said.
No, it's just the opposite. I said, I can understand how you might feel that way. I can understand feelings, but then you should at least search for some data that causes you to say that. Said CapEx reinvesting at about 1.6, 1.7 times. Number of salespeople, we've added 1,000, 1,500 salespeople, which don't pay off in the first year. That's just an expense that you're taking. Take a look at R&D, over 7% of sales. The amount of restructuring dollars that we take, all of which we take into expense. And then you take a look at the aero concessions that we spend, again, which we all expense. We don't put on the balance sheet.
Original equipment, the chart showed very clearly this time that you are at the peak of the original equipment incentives.
And it's a 25-cent headwind this year.
Yeah, but again, going back to the previous meeting, I had felt that 2017 was going to be filled with perhaps ever-rising OEM incentives. That's not true.
No, I didn't. No, it's not the case.
That's the way I felt. And then Alcoa pretty much said that 2017 is not going to be so hot. So then you start extrapolating. amazing.
And you get carried away.
Yes, you get carried away. Now, let's talk about Internet of Things and Turbo Golden Age. These were terms that were introduced, and far more about software, who you're hiring.
Yeah.
The Honeywell that's in this deck is a company that's moving to software and service.
Yes. Well, the software business, as you know, is really important to us. Almost half of our engineers are developing software today. And I always think if you look at our products and stuff, you'd say, okay, it's chemical, mechanical, electrical engineers. But half of our guys are developing software. So it's a big deal for us. And that's why I always say in this industrial Internet of Things and our M&A profile, that's why we focused on software and technology as much as we have. I think we're the best positioned industrial company out there when it comes to understanding not just digital, but physical, because that's going to be what Internet of Things is how do you match digital physical as opposed to just digital like everybody else does today.
So talk to me about the connected aircraft so I feel better about even if there's airspace is slowing.
You'll watch the Super Bowl this year.
Yes, you saw that. I mean, that's very important. I was just on a Continental flight at Go Again. Only, well, there is another system, but all new planes will be able to allow us to stream Netflix because of yours.
Yeah, actually, we're in the process right now of getting all the OEMs certified, so hopefully we'll do a bunch of that during the course of this year. Once that's all certified, then they can start putting on the new equipment, and you'll be able to download a 2-hour movie in 2 minutes. And you could have 100 passengers doing it at the same time, and it'll work.
Okay.
And so you can be 45,000 feet over the Pacific using it. You don't have to be connected to land. So it's quite impressive.
But you also, a lot in here about the notion of that so much of your business is energy solutions, which again is a secular growth market.
Yeah. Well, when it comes to energy efficiency and the world growing from 7 billion to 10 billion people, air, water, land, cleanliness is going to be more and more important.
Right.
Energy efficiency is going to be more and more important. 50% of our portfolio addresses that. And if you take a look at the new refrigerant that we've developed, this Solstice that we've talked about, this thing is magnificent and has a 0 ozone depletion and has global warming potential less than CO2. So everybody always gets cranked up as a factor of CO2. This is actually less than CO2, so it's that good.
Okay, now we know that this is, I believe, your last big analyst meeting because you're retiring. Did you do something, would you say, because again, I want to qualify this because the stock was down 10 and people were concerned.
Yeah, I was shocked.
But there have been times where you have been so conservative at the beginning of a conference call that we have had to talk about that. Was this one, I mean, I expected a swan song that was more positive. It was conservative, Dave. And this is something, for instance, I did not see the slide, Honeywell is a bargain in the previous analyst meeting. Right?
Well,
I mean, you left me think that Honeywell should be sold unless you can buy United Technologies. Why did you hold this back? Again, people made decisions to sell the stock, Dave, and that was harsh, but they did.
Well, you know, the part that's unusual about that chart is that I get a lot of comments from analysts that they don't want me focusing on PE or saying that we're a good deal. And I keep saying, but that's an important part of the story, is that we're still a good buy. And if you take a look at our long-term earnings, what we've done since 2007 versus our peers, and you take a look at our profile going forward, our PEG ratio looks pretty darn good.
Right, the price to earnings, and this is a price earnings ratio chart that shows you versus 3M, Illinois Toolworks, GE, Emerson. It's just you're a cheaper, well, particularly after the decline.
Yeah.
So if you had it to do over again, would you use this deck and not what you used?
I would put a lot more of the stuff that I've already got in there.
Golden Age of Turbo, could you put that in there? I like that.
Because this is all true. Golden Age of Turbo, this is going to go on for another 10 or 15 years. Yes, I wish I'd included a lot more of this stuff. I gave credit for people understanding what our long-term profile was. I was wrong. Well, this is one where I could have done a significantly better job of communicating this story. And we tried to do it in the context of 2017 is going to be good. But it seemed to get totally lost.
Well, I think that you just clarified it for a much more, frankly, larger and more important audience, which is our people. Thank you so much, Dave Cote, outgoing CEO and chairman of Honeywell. Mad Money's back on you. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.